All right, so you probably saw the headlines about Tesla's FSD getting the green light in Europe. And look, the immediate take is, oh, cool, a new feature. But if you're looking at this as an investor, that is completely missing the point. The really valuable part of this news, the part that actually matters for the valuation, has nothing to do with a car driving around Amsterdam, not at all. It's about the fact that the most expensive, most speculative part of Tesla's entire story just got its first real, hard-won stamp of approval from one of the toughest referees on the planet. And right there, that's it. That's the entire thesis of this whole breakdown. So forget the feature for a minute. We need to talk about the valuation, because from a pure investment perspective, something pretty fundamental just changed. So, just to get the facts straight real quick, on April 10th, Reuters reported that the Dutch authority, the RDW, gave the official go-ahead for FSD Supervised. This is the first time it's been formally approved in Europe. Now, the RDW made it super clear. This is a driver assistance system, okay? Not full self-driving. The driver is still responsible. All right, that's the news. Now, let's get into what it actually means.
So as investors, our question isn't just what happened, it's what actually changed. Does this news make that huge multi-billion-dollar story about autonomous driving more believable? I mean, does it make it more likely that all that future profit everyone's hoping for will, actually happen? That's the real question we need to answer. So to figure that out, here's how we're going to break it down. First, we're going to set some clear boundaries on what this news is and what it isn't. Then we'll zero in on the one variable that really shifted. After that, we'll get into the exciting part, how this unlocks valuation. And finally, we'll wrap it all up with a solid value investor summary.
Okay, first things first. Before we even start talking about valuation, we have to draw some really clear lines in the sand. Let's manage expectations and get the facts straight, because that's the foundation of any good analysis.
And this is super important to understand. This is not a blanket approval for all of Europe overnight. It is definitely not, and let me say it again, not the arrival of robotaxis. That whole dream of cars earning money while you sleep, still way, way down the road. And critically, this isn't just the US software copied over. It had to be specifically adapted and validated for European roads.
So here's the best way to think about it. What just happened is a regulatory entrance. It's the key that gets you in the front door. But you haven't bought the house, you haven't furnished it, you haven't even walked through all the rooms yet. This is the beginning of a de-risking process, not the finish line. And as investors, that's exactly how we have to see it.
So if this is just a baby step in terms of features, what really changed? Well, from a value investing standpoint, the single most important variable that just took a step forward wasn't the car's ability to turn left, it was its credibility. Let's talk about that term, regulatory credibility. This is a huge deal for any company that's built on a big futuristic story. It's that moment when a company's own claims, their own narrative, gets checked and then validated by a serious external authority. It's the shift from, here's what we say we can do, to, here's what a regulator has confirmed.
So what did this validation actually change? Well, for years, the FSD story has pretty much been a US-only narrative, right? Operating in a much more, let's say, permissive regulatory environment. Now, for the first time, it has a legitimate foothold in Europe. This gives the market an actual foundation of proof to build on, not just promises. And maybe most importantly, it creates a visible, repeatable playbook for how they could expand across the rest of the continent.
And that brings us to the main event. This is the part that, from a valuation perspective, is actually worth the most. Forget the feature for a second. This is all about how this single approval begins to unlock the long-term value of the entire company.
Okay, think about it this way. For years, trying to value Tesla's autonomy was like trying to price a lottery ticket. It was all based on a promise, a story about the future. It had massive narrative risk, and honestly, it was almost impossible to model with a straight face. What this approval does is start the slow but crucial process of turning that speculative lottery ticket into something more like a priceable asset. The regulatory risk just came down a notch, which means we can finally start assigning more believable probabilities to those future cash flows.
And let's be clear, this credibility wasn't just handed over. It was earned. This was a brutal gauntlet that took over a year and a half to get through. We're talking more than 1.6 million kilometers of testing on European roads, over 13,000 public ride-alongs for officials and the public, a mountain of data and documentation. The intense difficulty of this process is exactly what gives the final approval its weight. It wasn't a rubber stamp. And this really shows you why it matters so much more. In the US, the approach is mostly launch first and we'll check later. It's self-certification. In Europe, it's the total opposite. It's a mother may I ask system. You have to prove it's safe before you're allowed to launch. So passing the European test, with all its strict prescriptive rules, is just a fundamentally higher bar to clear. And for an investor, that signal is so much more powerful.
And then you get this, a direct quote from the regulator. They didn't just say, yep, it meets the rules. They said that using it correctly makes a positive contribution to road safety. For a technology that has been dragged through the mud for years, getting that specific line from one of the world's most respected automotive regulators is, from a valuation standpoint, pure gold.
So if you take away one thing from this section, it's this. The most expensive, most futuristic, and most debated part of Tesla's entire valuation just had to take a final exam set by one of the world's toughest teachers, and it passed. In fact, it got an A+. This doesn't mean the story is over, but it does mean the story is now, officially, real.
All right, so let's tie this all together. How should a value investor actually think about this news? Let's run it through a classic framework.
First, intrinsic value. Did the long-term earning power of the company actually change? You know, I'd argue it did, even if just a little. The probability that those massive future cash flows from autonomy might one day actually exist just got a tangible little nudge upwards. It's a tiny bit less of a dream today.
Second, margin of safety. And this is the million-dollar question for anyone looking at the stock right now. The debate has shifted. It's no longer about if this tech can ever get approved in a strict place like Europe. We know it can. The new question is, how much of this de-risking, this good news, is already baked into the current stock price? That's the homework.
What about the moat, that competitive advantage? Well, it just got a little deeper, but in a totally new way. This isn't just a technology moat anymore. Now it's a regulatory playbook moat. They have a proven, step-by-step guide for getting advanced AI through one of the world's toughest systems. Any competitor who wants to play in that sandbox now has to climb that same steep mountain.
And finally, the expectation gap. This is where the real opportunity often lies. The surface-level take is, oh, a new feature for Dutch drivers. But the deeper, more valuable insight is recognizing that a multi-billion-dollar valuation story just received its first and arguably most critical stamp of legitimacy. That gap between what the market sees and what's really happening, that's where value is found.
So when you boil it all down, the real story here was never about a car or a feature or the beautiful streets of Amsterdam. It was always about a much bigger question. Was the core narrative supporting so much of this company's sky-high valuation real enough to pass a serious test? And on April 10th, for the first time, we got an official answer.
And of course, just a reminder that all of this is my personal analysis based on publicly available info. It is absolutely not investment advice. You know the drill. The market's a crazy place, so please, always do your own research before making any decisions.